morning everybody, it's EURUSDJPY from Screen Education with the 4 Managers Analysis Update for the 14th of April 2011. Just going to be looking at our CTC strategy template on the Euro US dollar. Look at the daily time frame. You know that yesterday, yet another pause at a resistance level. There we go. So we had 1, 2, 3, 4 areas of resistance at this high at 14.4860. But this morning we've seen the Asian market take it higher, and we're trading higher this previous resistance level. So now what we need to see is price closing above this area. So ideally the measure stick would be that this high here at 14.4860 will be the intraday support. Can't drop below that, because the moment it drops below that, then we're going to have the same situation that happened over here. So intraday 14.4860 is going to be our support area. So if I go in and look at the 30-minute, for example, the 14.4860, if I can find it, that'd be great. 60, there we go. That there is our support area. Price needs to be trading above this in order to be still considered bullish and to see further extensions to the upside. These extensions over here were fake outs, is what you're seeing, these wicks. So very important. Price needs to be trading above this area. Ideally, if you want to see further extensions to the upside, it needs to be trading higher than these bodies over here at the 14.5150 mark. But as long as price is still trading above this area during the course of this week, then we should still be looking for consideration of further upside movement. Price is trading above all the moving averages on our 30-minute time frame, and with CTC is blue. Same with our 15 minutes. As of 2 a.m. GMT this morning, we've seen price pull back after the initial sell-off, and we've seen highs posted, and what we're seeing now is price trading above that all-important support area. It needs to stay above. There we go. And as long as price is trading above that, then we should see further extensions to the upside. So mark this, put that line in, and just be aware of it. Same over here at 14.5150 or higher. You can put it in the wicks, your choice. Your trading body is a wicks. In this case, the 14.5200 would have to be the area where price is trading well above in order to be creating new highs for this time frame. Otherwise, what you're seeing here, these are wicks, and as long as it's trading inside here, there's a good opportunity we might see consolidation. It's done it before, but as long as it's trading above the 14.4860 mark, then we should still classify this as bullish, and we could see further extensions to the upside because of it. Next up is sterling. That's the UK sterling against US dollar on a daily time frame. You'll notice that yesterday we finished off with an up candle, primarily because price actually opened and closed slightly higher than the previous day's down day, and if I'm not mistaken, it bounced on the 38.2% fib area at 16,2500. I mentioned that 16,2500 would be a nice support and resistance level because we've been in the past. We've seen a lot of hesitation around this area in the past, so it's important that it stayed above it. And sure enough, we've seen price now this morning on Asian market actually follow through, and we've seen price climb higher. Ideally, we want to see price continue in this direction. You can see we've had a swing support 1600. I'll put that in so you can see long-term support and resistance at the 1600 mark. Then we had a swing high, and now we're looking at a potential swing high yet again, and a reattempt of the 16400 mark, or even better, the highs over here at 1643 or 4400. So intraday, you should see price moving further to the upside. You can see on our 4-hour, for example, the 50 period moving average acting as a nice resistance level, support level, and that'll be the 38.2% fib at the 1625.500 mark and pushing it higher. CTC in this case hasn't yet matched up because we still have the red, but we have the blue candles popping in now. Hourly, you can see that strong resistance, and as I mentioned to everybody yesterday, as long as it's trading above 16,2500, there's more opportunity to see further upside movement occur. And sure enough, we've seen a bounce on a number of occasions at this level, and it's pushed higher this morning. It's trading above previous highs, yesterday's highs around the 162900 mark, and it's trading above the day prior to that at 163100. So you can see that the momentum shift to the downside has been broken now, and it's trading well above these previous low swings, and it looks like we might see another attempt of the 16400 mark, or ideally the wicks up here at 1642.50. TTC is in our favor in this chart, so the 30-minute should also be the same, as well as our 15 and our 5-minute. Next up is the US dollar against Swiss franc. Just pulled up the daily time frame. You can see the CTC is well extended red across the board. You can see price moving further to the downside. We've noticed a breakout early on the last couple of months at 93500, and we've seen another one just recently where price has tried to pull back and traded and failed to break higher. So you can see we're having lower swings, bar one occasion where price actually traded, if I'm not mistaken, the same high. No price support at this level here, but you had to swing low, swing low, swing low, swing low, swing low, swing low, swing low. So swings are always moving to the downside, and you can see price as we speak now is trading lower than a previous swing or support area, i.e. this one over here. See price broke through consolidation, and we've seen price revert to the downside. Now we're trading at an all-time low on this pair. If I take it to a weekly chart, you can see that price is very negative. If I just happen to take the last two low points and drag through, you can see that price, we're looking at an area where price can potentially move to roughly the 0.860 mark, which is a long way off. So still a lot of momentum for this pair. That's on a weekly chart, by the way. So there's a long way for this to go. This chart here shows you the hourly, the extension. Look at this beautiful extension to the downside. This is a clear indication of a trend, a strong downtrend in play. Notice how when it's trading below the 200 period moving average, the 20 crosses over, the 50 crosses over, we see a bit of consolidation taking place. There we go. And what happens? We have a breakout. CTC's in our favor, and it's just breakout, pullback, and continues, and swings lower on each occasion. This is a classic indication of breakout trading. Support, 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 breakout, pullback, continuation. And then we had the same thing yesterday. Didn't quite work to start with. You can see there was a ceiling level, couldn't break higher, and then we had some support here. It broke lower, consolidation, back to these 20 period and 50, and then we've seen price revert to the downside. Clear indications, entry levels, stop loss above. Beautiful trading. Entry level, stop loss above. These are all clear indications of trades to the downside. So you can see the hourly matching up really nicely, and you can see the extension to the downside. So ideally, all the smaller time frames you'll see in the 50 period in this case over here acting as resistance level, and price reverting to the downside. 5-minute sell chief on a whole, every chart telling us or giving us a sell indication, and the 26.8 has been tested. We should see a bounce at 81,900 now. That's a round number, and we've seen price pull back. Price would have to break and close lower than 261.8, which is the 0.8900 mark, to see further extensions to the downs. Last pair of the day is the US dollar against Japanese yen. Have a look at the daily. You can see price, the US dollar has really pulled back. And I mentioned yesterday we'd like to see the 83.50 mark confirming support. And just find it's roughly around there. This is being the 200 period moving average and the 20 period moving average now moving to into the time frame. Notice that the CTC has gone red, but we still have blue candles. We're still pretty much in an up. As long as it's trading above 200 period moving average, it's still looked at as a very bullish sign. So this pair is trading at its all-time high in the last 20 or 200 bits of information, or days, or periods of information, and that's a very, very, very strong indication. And as long as you can find support at 83.50, then there's a good likelihood of price moving higher. You can see at the moment now it's trading at 83.45, but the 200 period moving average is the support area in this pair. So mark it down, mark it. If you really wanted to, you can take the 200 period moving average at the, let's have a look here. Take it at 83.39 intraday. So on a 30 minute, 83.39, thereabouts. That's going to be our intraday support. As long as the price is trading above that, then we should see further extensions to the upside. However, you can see that we have lower swings going into this. We're trading below all the moving averages. So it's looking very short, very negative at the moment. But that 83.39 mark could be or potential long-term support. So as long as price is trading above that, then we should see price potentially testing another reattempt at the highs that it came back from just recently. So if it fails and it breaks lower than that and closes lower, you can see that we had a fake out at 3 a.m. GMT this morning on the 30 minutes. It's got to close lower, confirm that it wants momentum to the downside. Once it's done that, then we should be looking for further extensions to the downside. CTC is in our favor for further downside movement. So just watch this. I would definitely put a alert on either side and watch this one. We need a definite confirmation break to the downside. Otherwise, all we're going to see is a bounce. You're going to have another wick trading lower. It's just going to pull back, trigger people in, fake them in, and then we could see the US dollar rallying against the Japanese yen. We've seen it gain a lot of momentum recently, and by doing so, it has now traded well above a consolidation pattern that's happened for, we haven't seen, well, it's occurred, started way back in October. So there's a lot of momentum in this, and to see further extensions on the US dollar to the upside against the yen, we need to see it find support at the 83.39 mark. That's it for today, guys. Hope you have a fantastic trading day. Make sure that you follow the rules of the strategy. Make sure your money management is in place.